Welcome back to Investing Talk Podcast. Today, we're tackling a question that's been buzzing in our listener mailbag. Is Rocket Lab USA a good time to buy now? We've pulled together some really interesting sources to help us unpack this, looking at everything from their financials to market sentiment. Before we jump in, if you find this kind of analysis helpful, please do hit that subscribe button, maybe like this episode, and leave us a comment. Your engagement really helps us bring more of these insights to you. And if you're feeling extra supportive, you can always buy us a coffee. Plus, if there's a specific company you'd like us to look into next time, just drop its name in the comments below.
Yeah, it's a fascinating company. Operating right at the cutting edge of a high-growth sector. And our sources provide a really comprehensive look, offering insights for both, short-term traders and maybe long-term investors. We're going to explore the key metrics and insights from these sources so you can get a clearer picture of Rocket Lab.
Okay, so exciting company, hot sector. But the first question is always, how are they actually doing? Let's look at the fundamentals. How is Rocket Lab performing under the hood?
Well, what's immediately striking is their revenue growth. Rocket Lab reported $466.02 million in revenue over the trailing 12 months TTM, as they say. And what's genuinely impressive is the nearly 78% jump from 2023 to 2024. They went from about $244 million to $436 million.
Wow.
Yeah, so that clearly signals incredibly strong top-line growth. It's fueled by more launch services and their spacecraft offerings. They're definitely selling more.
Almost 80%. That sounds fantastic. But the big question with these high-growth plays is always profitability, right? Are they actually making money from all that?
That's precisely the critical point here. Despite that amazing revenue expansion, Rocket Lab is currently operating at a net loss. Their net income, TTM, is negative $206.53 million. The EPS, earnings per share, is negative 241 cents. And what's more, these losses actually got a bit wider, about 4% compared to 2023. So it tells us profitability remains a significant challenge. They're clearly investing heavily.
Right. So it's a growth story, definitely, but not a profit story yet. And for a company needing massive investment, like building rockets, how are they managing debt and cash flow? Did the sources touch on that?
Our sources didn't give specific figures on their current debt or cash flow statements. But if you think about space launch companies generally, they inherently operate with huge capital expenditures.
Right. Building rockets and stuff.
Exactly. Building rockets, complex systems, infrastructure. It implies that managing their cash burn, how fast they spend money, and constantly securing new financing are absolutely crucial. It's a high-stakes game.
Makes sense. Looking ahead then, what are analysts predicting for earnings? Any light at the end of the tunnel for these losses?
Analysts generally expect negative EPS to continue, well, in the near term anyway. The projection is negative 0.09 cents for the upcoming quarter.
Still negative, but better.
Yeah, exactly. While still in the red, there's a subtle trend towards narrowing those losses, which is, a positive sign. But because of these losses, the forward PE ratio, what investors pay for future earnings, just isn't available. It really suggests Rocket Lab is still firmly in that growth and heavy investment phase, not profitability. Investors are betting on the future here.
Okay. Now, space is a big area. Where does Rocket Lab fit in? Who are their main competitors? Are they trying to be the next SpaceX?
That's a really good question. Rocket Lab has carved out a very specific niche. They focus on the small to medium rocket launch segment, primarily launching small spacecraft and managing satellite constellations. So while it's a complex industry with giants like SpaceX, Rocket Lab's focus gives them a competitive edge. They're not necessarily going head-to-head on the biggest launches. Their specialization in small sats allows them to be agile, efficient, maybe offer more frequent launches compared to the big guys. They serve a specific growing market.
That's a key difference. Now, given this great growth, but losses, how do we value Rocket Lab? How expensive is the stock right now?
Right. This is where it gets really interesting and maybe a bit tricky. When we try to use traditional metrics like the price-to-earnings ratio, the PE, it's just not meaningful because, they have negative earnings.
Yes, divide by negative, yeah.
Exactly. Same for forward PE. Unavailable.
So if PE is out, how do we look at its price relative to sales? Which, they are growing well, the PS ratio.
Precisely. The price-to-sales ratio helps here. And for Rocket Lab, the PS is approximately 48.3.
48. Wow. How does that compare?
Well, to put that in perspective, typical aerospace and defense companies, their PS ratios are usually in the 5 to 10 range.
5 to 10 versus 48.
Yeah. It comes from their market cap, about $22.5 billion, divided by that $466 million in revenue. So for every dollar of sales Rocket Lab makes, the market values it at nearly $50. That's an incredibly high valuation relative to sales,
Yeah.
way above the norms.
That's an eye-watering difference. So what are investors betting on to justify that kind of premium? Is it just future growth hopes?
That's exactly it. It's less about current financials and more about perceived long-term potential, maybe market disruption. Think of it less like a traditional aerospace company, more like a pure-play space tech innovator.
Okay.
Investors are essentially betting big on future market share in satellites, maybe deep space, maybe even in-space manufacturing areas Rocket Lab wants to lead. The valuation reflects a belief that their Electron rocket and Photon spacecraft are just the start, poised for huge growth, even if profits are years away.
And price to book?
Also unavailable in our sources, but you can bet it would likely be very high too. The market's valuing future potential way more than current assets.
Okay, beyond the fundamentals and that wild valuation, what about the technicals? What are the charts saying about the stock's current momentum?
Right, looking at the chart, the current price is around $46.03. That's actually quite close to its 52-week high of $53.44.
So recent strength then?
Definitely suggests significant recent strength and upward momentum.
And the moving averages, what are they showing?
The 50-day simple moving average, SMA, is $31.01. The longer-term 200-day SMA is $23.14. The fact that the stock is trading well above both of those is typically seen as a very bullish sign.
Okay.
It indicates a pretty robust short to medium-term uptrend. Buying interest seems strong and consistent.
How about the RSI, the Relative Strength Index? Is it looking overbought?
The RSI is around 57.86. That actually puts it in a neutral to slightly bullish zone.
Oh, interesting. Not extreme then.
No, exactly. Which is quite healthy, actually, and suggests there might still be room for it to move up without an immediate sharp reversal being likely. That might reassure some people.
And volatility, for traders maybe. Smooth ride or roller coaster?
Oh, definitely more roller coaster. Volatility is quite high, around 20.66%.
20%, yeah.
Which is pretty typical for space and high-tech stocks. News can cloud big swings. So, yeah, for traders who like that kind of action and are okay with higher risk, this could be appealing. But long-term holders need to buckle up for ups and downs.
So upward trend short term, but definitely potential for big moves, not for the faint of heart.
Exactly. If you check your portfolio every 5 minutes, this one will give you whiplash. But the chart is showing strength right now.
Okay, let's shift gears a bit. Given the numbers, the valuation, what's the general vibe on the street? What are analysts saying? Market sentiment.
Analyst opinions are interesting. There's a bit of a nuance. The average rating from, say, 13 to 16 analysts is a buy, which sounds great, right?
Sounds positive, yeah.
But their average price targets range from about $32.42 to $37.83.
Wait, hang on. That's lower than the current price, around $46.
Exactly.
What does that mean? Are they saying buy, but don't buy it now?
That's the critical point, yeah. It implies a potential downside of maybe 30% from where it is now, despite the buy rating. It suggests analysts believe in the company long-term, the business itself, but they feel the current market price has maybe gotten a bit ahead of itself based on their models.
Buy the company, not the current stock price. Interesting.
Yeah, kind of, yeah.
What about broader market sentiment? Is the market feeling greedy or fearful right now? How does that play in?
Overall market sentiment seems pretty neutral, actually leaning a bit cautious. The fear and greed index is at 39 right now, which is in the fear zone.
Okay, fear.
Yeah, so that suggests cautious investor sentiment overall, which can sometimes pressure high valuation growth stocks like Rocket Lab, even if their specific story seems strong.
Did the sources mention any insider buying or selling? Or social media buzz? We know that can move these kinds of stocks.
No specific insider activity, buying or selling, was noted in the data we looked at for Rocket Lab, which is, neither here nor there, really. And social media buzz wasn't explicitly covered, but, we all know rocket and space stocks often attract a lot of retail investor interest.
Sure.
Which can definitely add to volatility and make them prone to sudden moves based on online chatter.
Right. Okay, let's talk about what could move the needle then. What upcoming events or developments could significantly impact Rocket Lab's stock, for better or worse?
Well, a big one coming up is their next earnings report. That's scheduled for August 7th, 2025.
August 7th.
Yeah, that will definitely impact the price, especially any news on profitability, new contracts, or changes in the revenue guidance.
Anything else on the horizon? Other potential catalysts?
Absolutely. Beyond earnings, think about successful new product launches, maybe deploying new satellite systems or landing major government or military contracts. Those can be really strong catalysts,
Yeah,
proving their tech and locking in revenue.
makes sense.
And even broader things like big advances in space exploration generally, or new regulations, or even news from competitors could sway sentiment.
Okay, on the flip side then, the risks. What should potential investors really be aware of here? What are the big red flags?
This is crucial. Stock-specific, the negative earnings, and that extremely high valuation we talked about, they point to significant execution risk and cash flow risk.
They need to deliver.
Exactly. They're still in growth mode without consistent profits. That adds a lot of uncertainty. They need to keep raising money and hitting their milestones.
And the sector itself, aerospace and space must have unique risks.
Oh, absolutely. It's incredibly capital intensive, requires massive ongoing investment, plus significant regulatory hurdles, launch approvals, operational rules. It's complex. And then there's technological risk. Innovation is fast, but failures can be incredibly costly financially and reputationally. Not an easy business.
And broader market risks. How does Rocket Lab react to market swings?
It has a high beta, 2.16.
Okay, what does that mean simply?
It means the stock is highly sensitive to overall market movements. If the market dips, Rocket Lab is likely to dip even harder, higher volatility during downturns.
Got it.
Now, the trading volume is good, around 1.7 million shares daily, so there's liquidity you can buy and sell easily. But that high volatility, around 20.66%, means big price swings are just part of the deal. It's a potentially wild ride.
Okay, so after digging through all of this, the growth, the valuation, the technicals, the sentiment, the risks, what's the final verdict? Is Rocket Lab a buy right now?
Well, our sources really paint a balanced picture. And honestly, the answer depends heavily on you, the investor, your timeline, your comfort with risk.
Can you break down the ratings the sources gave for each area we covered?
Sure, let's summarize. Fundamentals, rated 5 out of 10. Strong revenue growth, yes, but countered by those persistent losses and uncertainty about future profits.
Okay, middle of the road.
Valuation, rated low, 3 out of 10. That PS ratio is just extremely high, no PE. Looks significantly overvalued based on current fundamentals. Technicals. This is where it shines, rated 7 out of 10. Price momentum is strong, positive signals. Potentially attractive for short-term trading. Sentiment, rated 5 out of 10. Neutral, but cautious, with that fear index reading and analyst targets below the current price.
Okay.
Overall, comes out to 5 out of 10, a truly balanced view. Big growth potential versus high valuation and considerable risk.
So for different types of investors, what's the takeaway? Is it a buy for anyone or should people hold off?
For short-term traders who have a higher risk tolerance, the technical strength, the volatility, the upcoming catalyst might make it attractive for speculative plays.
Okay, for traders.
But for long-term investors, our sources really advise caution. Consider that high valuation and the lack of profit very carefully. The lean is towards maybe waiting for a significant price correction and clearer signs of improving profitability before jumping in long-term.
Is there a specific price range suggested for those patient long-term investors? A better entry point?
Yeah, the sources suggested looking for an entry around the $30, $35 range.
Ah, closer to those analyst targets.
Exactly. That would offer a considerably better risk-reward scenario for a long-term hold. It's about patience.
And for the traders playing the swings, any advice on stop losses or take profits?
Definitely. For traders, a stop loss maybe 10% below your entry point is prudent to manage risk. So if you buy at $46, maybe a stop near $41.50. For taking profit, you could target recent highs, maybe around $50, or look towards analyst targets, depending on your strategy. So yeah, to sum up, Rocket Lab is very much a high-growth, high-risk stock, potentially interesting for speculative trading on technicals, but looks overvalued and still loss-making for long-term investors at today's price.
What an interesting breakdown. It really shows how Rocket Lab is a company to watch, but maybe for different reasons depending on who you are as an investor.
Indeed. Understanding these different angles, fundamental, valuation, technical, sentiment, it's just key for making informed decisions, especially with these high-growth, volatile names. Different lenses give different views.
So, what does this all mean for you, our listener? Do these insights change how you see Rocket Lab? It certainly makes you think about your own risk appetite and timeline, doesn't it? Something to chew on as you consider your next move. Thank you so much for joining us for this analysis. We hope exploring Rocket Lab this way provided some valuable insights. Be sure to subscribe, like, and comment. Let us know what you think or what company to look at next, and we'll be back soon with another exploration.